You know Zillow. It's the app we all have on our phones for a little real estate daydreaming. But Zillow is so much more than just a place to browse homes. It's a massive business, and it has some really big ambitions. And if you look at their latest financial results for 2025, you can see a clear strategy taking shape, one that looks a lot like they're building a real estate super app. So let's break it all down.
Zillow's official mission is pretty ambitious, to completely transform how we move. But is that just some slick marketing slogan, or is there a real, profitable business strategy behind it? Well, let's dive into the numbers and see if the business itself is as impressive as the app. Okay, let's kick things off with the big headline number. In 2025, Zillow's total revenue grew by an impressive 16%, hitting nearly $2.6 billion. Now, that's a huge figure on its own, but it's the context around it that makes this number really stand out.
And here's that context. This slide really puts it all into perspective. While the entire U.S. residential real estate industry grew by a pretty modest 3%, Zillow just blew past that, growing more than 5 times faster. This isn't just a company growing with the market. This is a company actively taking a much bigger piece of the pie. So, was this just a lucky year? Well, Zillow's CEO Jeremy Waxman is pretty clear that this isn't some happy accident. He credits it to, quote, disciplined and consistent execution of our strategy. So that tells us there's a real plan here, a deliberate strategy at work. So what is that plan? And where is all this growth actually coming from? To really get what Zillow is doing, you have to follow the money. Where is that $2.6 billion actually flowing from? Let's dissect the revenue streams and see what's really powering this business. This chart kind of lays it all out for us. The for sales segment is the undisputed heavyweight, bringing in over $1.9 billion. But you can't ignore the rentals business. That's a pretty hefty chunk of change, contributing a substantial $630 million. Now, if we dig a little deeper into that huge for sale slice, things get even more interesting. Of course, you've got the core residential business driving most of it. But look what's tucked away inside, a nearly $200 million mortgage business. And that right there is a huge clue about their bigger strategy, as we're about to see. So we've seen where Zillow's money comes from today. But, the more exciting question is, where is the future growth coming from? Let's take a look at the parts of Zillow's business that are really hitting the gas. Wow, okay, this chart tells a story, doesn't it? While the core residential business grew by a solid 8%, which is great, the real story is in rentals and mortgages, with growth rates of 45 and 39%. I mean, come on. These are clearly Zillow's new rocket ships. So, what's fueling that incredible 45% growth in the rental segment? Well, the data points to one clear winner: multifamily revenue. We're talking about their business with large apartment buildings, and it is absolutely booming. Revenue is up an astonishing 63%. And it's a very similar story on the mortgage side, a 67% increase in the number of loans they're writing. That's what fueled that 39% revenue jump. This is a crystal clear sign that Zillow is moving way beyond just being a listing platform. They're becoming a key player in how you actually finance a home too. Revenue growth is exciting. It gets headlines. But it's not the whole picture, right? For any business, the real test is profitability. After all this growth, is Zillow actually in the black? Let's take a look at their bottom line. And the answer is a resounding yes. Just look at that net income line. It shows this dramatic shift from losing $112 million in 2024 to turning a $23 million profit in 2025. That is a huge turnaround and a major milestone for the company. Now, you might have noticed another key metric on this table: adjusted EBITDA. It's a term you hear thrown around a lot in finance, but what does it really tell us about how a company's doing? Well, the simplest way to think about adjusted EBITDA is as a measure of a company's core operational health. It strips away all the noise, like taxes and interest, to give you a clearer picture of how the main business is performing. The fact that Zillow's adjusted EBITDA grew to $622 million is a really strong indicator of the company's underlying financial strength. So what's the foundation for all this financial success? It all boils down to one thing: Zillow's massive and incredibly engaged audience. In the fourth quarter of 2025 alone, the platform attracted an average of 221 million unique users every single month. And we're not talking about casual visitors here. In just 3 months, Zillow's users generated 2.1 times billion visits to their platform. That incredible level of engagement, which, by the way, is still growing, is the engine that drives this entire business model. Okay, so we've looked at the revenue, the profit, and the user base.
What does it all add up to? Let's boil this all down to a few key takeaways from Zillow's 2025 performance.
First, Zillow's strategy is clearly working. They're not just growing, they're absolutely crushing the market. Second, they've successfully diversified, with rentals and mortgages now acting as these powerful new growth engines. Third, they've hit that all-important milestone of profitability. And finally, all of this success is built on the bedrock of a massive and growing user base.
So, Zillow has already made huge inroads into buying, selling, renting, and financing. They are getting closer and closer to building that true super app for real estate. So the question now really is, what's next? With this much momentum, what other parts of the homeownership journey will Zillow set its sights on? Home insurance? Moving services? The possibilities are pretty much endless.